Good morning, Fractal Effects team. Please make sure you read the disclosure before we get started. If you're following along with us today, make sure you do in a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. We'll jump onto the charts in a minute. So a lot of things going on here. We have a mean reversion model where the midpoints are matched up between Asia and London. We have not taken either one of the manipulation zones yet. We're about to. It's sitting right by the blue zone. So when you have a mean reversion model, market likes to ping pong back and forth between the highs and lows. And we just took the manipulation zone to the bottom. Now let's see how deep it goes. We have to see a 5M fair value gap be created. Let's see if it rips right through. Again, this is an as we're looking at here, CFD contract. And we're bullish on the 5 and the 15, not the 1. Drop in a fib here. Right at 50%. I can see it dipping down right into this zone, which is the London and Asia fair value gaps. They're matched up right here. So right now, even on the 1M, the inducement's up here. That's the last pullback on the 1M. Just want to mark that out. Jump back to the 5. A lot of levels down here. Not only do we have both the Asia and London fair value gap, we got the N-Dog is right there, that aqua line. An even deeper, darker blue zone down there, which is stronger than this zone. And they're all sitting right in the golden zone, 61 to 79%. That's why we wait for a bullish fair value gap to be created first. So we're about to take inducement. That's the pullback. Still have no 5M fair value gap here yet. We're about 5 minutes from 10. Big moves happen at 10 o'clock. We also have some orange folders, some moderate news dropping at 10 o'clock. Right now, no fair value gaps have been tapped, not even on the 1M. So this is just one consecutive leg push up. We have fair value gaps on the 1M, but none of them have been tapped. And none have been created yet on the 5M. So when you see this kind of a push, now if it takes out the other side of the manipulation range without really letting us in, that means it wants to turn back around and head down, most likely. Rejection right off that blue zone, manipulated, but we need that 5M fair value gap. If it was an upside expansion model, I would have even dropped to a 1M and looked for an entry. Anytime you see this mean reversion model where the market wants to retrace back to the midpoint, that's when it becomes a little sketchy. Because we just wicked the bottom of the manipulation zone. We left these equal relative lows, not to mention this, the midpoint of this mean reversion. So the market's more drawn to this zone. .38 seconds left. So we're at 10 o'clock now. See if this fair value gap stays open. I guess it closed it off immediately. There you go, it's closed. So far there is no NYC fair value gap as of yet. And if we break down one more time, then that's our double break to the bottom. I'd be most likely interested in going to take out London lows then. So if we break this low. At times I like to wait for a double break, especially in models like this. That's the dealer revealing their hand. Once I have a double break, the probabilities increase in that direction. So we did not create a 5M fair value gap. I'm not interested in taking this. And it's because it is a mean reversion. If we had hit this area, then headed up, that would have been more interesting for me. But when it leaves the 61% of these fair value gaps intact, then it means it wants to possibly take out the top, then drop, or do a double break and continue dropping. I actually prefer it do the double break now if it's going to. Yeah, until there's a 5M fair value gap, I'm not interested. And as soon as it does a double break, then this fair value gap that it creates becomes our area of interest, potentially all the way up to this wick. It's a big wick, 5M. 1 minute, 44 seconds left. Let's see if we take this low. Wait it out, be patient. Small blue zone in that area as well. As soon as that's taken, if we take that low, we're heading down to London lows most likely. So we've already violated this 1M fair value gap by closing below it. There's no other fair value gap here. Now it's using the purple zone and the blue zone to engineer new liquidity. This is a strong zone, so it could bounce off of this, but as mentioned before, with this model, I'd rather see a double break in either direction. So if we're going up, I'd rather see a double break to the upside. Slowly starting to create another NYC fair value gap. Let's see if this one sticks. We still got another 4 minute 45 seconds though, so a little doubtful. So this would be a shallow retracement if it did end up going up from here. 50%. Still no New York fair value gap created. Today's also Tuesday. So for bullish, remember Tuesday, there's a high probability, 70% chance that Tuesday will set the low for the week. It's another reason I'm more or less favoring a drop and to take out previous day's lows. See where previous day's lows are. Probably caught up in somewhere in this range. There's previous day's high. Previous day's low is all the way down. I guess we had a huge range yesterday. It's all the way down there. So there's the consequence encroachment of that wick. It could use that to go back down. I prefer to see a double break. Yeah, not the biggest fan of this model. just a whole bunch of back and forth during a mean reversion model. Doesn't mean you can't find a trade setup. Just have to proceed with caution. As you can see, there was no 5M fair value gap created, so no foothold was created for us to actually take this. There was on the 1M, but even that violated. That fair value gap was violated. So even though we're bouncing off the zones, we want to see the fair value gaps respected. We had one closure, two closures below this fair value gap. And now we're potentially wicking right now off of the midpoint of this 5M wick. Still no New York fair value gap created either. "11 seconds left." Yeah, I'd rather wait for spotlight confirmation or a double break to one of the manipulation zones. Like an upside and a downside expansion model, I don't mind a contraction model. The trumpet model, the mean reversion, just becomes muddy. Still no 5M. Unless this is one that's being created now. We got 4 minutes 33 seconds. Let's see if this fair value gap sticks. So we're taking this high. Green across the board now. You want your models to match up. As I've said it before, day trading is not everyday trading. When your models don't match, there's no point. Something about these models. Again, it's a mean reversion model. It means price is drawn to the midpoint. We did not tap the midpoint. So we could just tap this and then drop immediately. If we get up there at all, I mean. 13 minutes left till the spotlight range is formed. I think I'm just going to wait for spotlight confirmation today. 2 minutes, 21 seconds left. One minute left. Let's see if it even leaves this New York Fair Value Gap open, or if it closes it immediately. So even though we've taken these highs, we're still closing below this 5M fair value gap. Which is not a good sign. So we did leave that 5M fair value gap open. We just tapped it. With 7 minutes left to go, I'd rather just wait for the spotlight confirmation. Because right now they're playing both sides. Engineering new liquidity, people going short from this fair value gap, people going long from this fair value gap. And as mentioned before, if it was any other model, even though we're green across the board here, the mean reversion model is not my favorite, as it could just drop after clearing those highs to take out those lows. Look at these midpoints between Asia and London, right in the middle. We have a slight upside expansion model from London to New York. But you want to proceed with caution. So 6 minutes left. I'd rather just wait to see confirmation and then retracement and extension. And meanwhile, during that time, if I see a double break of the manipulation zone, that'll just be more confluence for me. So this is the last candle before range formation. Get rid of this. Wick consequence encroachment. So those are the two zones that they're playing right now to engineer new liquidity. People going short from here, people going long from here. And even though we're green across the board and we manipulated down, we left these equal relative lows. Not to mention we did not hit the midpoint of that mean reversion model. If we had bounced off the midpoint of this, then I'd be more confident that we were going to drive up in here. But this was the first 5M fair value gap created, and there is no 1 to 3 here. Because if I got in here, where's my low going to be? My low has to be the third candle of the fair value gap model. That's this candle. It's not even a 1 to 1. 2 minutes 40 seconds left for range formation. 1 minute 37 seconds. So we might just get a bullish confirmation here. There we go. Let's see if it sticks. "30 seconds. If this was an upside expansion model, I would have gladly have taken a buy here. When you have this kind of model, there's a high probability that it could just reject. So we didn't quite get the confirmation right there on that candle. We fell just short of the range. So still no confirmation as of yet. I'm just going to take the bodies of this candle and see if that lines up perfectly. So now in order to get a double break, I'd have to see the market take this low, so pretty much this green line here on the 1M, take this low, and then take the high again. That would let me know that it wants to move up and not come back to the midpoint. Otherwise, if it drops all the way through and it breaks the bottom here and gives us a bearish confirmation while taking out this low, then I'm aiming for London lows, which are all the way down here. Did not get a confirmation. Now we're driving down. Either way, as soon as we pass this point, this white line, no, not sorry, not the white line, this green line. Let me change this. Let's get rid of this. As soon as we pass that white line, which we're going to most likely have to, if we want to go down or up, we're going to have to take out that white line this low. Still trying to figure out why everything seizes up the second we go live. I know it's supposed to slow down everything, but not to this extreme. We do have a confirmation on oil. Let's see what happens here. So the two reasons I'm proceeding with caution. One, we have a mean reversion model where the market likes to pull back to this area, the green. And two, today is Tuesday. So if we're bullish, Tuesday sets the low. 70% chance that Tuesday will set the low for the week. And I like those odds. That's why I'm a little cautious as far as entering a buy. I wouldn't have minded entering a buy here if we had tapped this wick and had a 5M fair value gap right after the blue zone, but this was our first 5M fair value gap. That's why I want to see a double break and a confirmation now. So but you can see how it respected that blue zone. Respected it once, respected it twice. Already we're getting a lot of drops, you can see right here on the 5M. All these wicks back and forth, back and forth. This was a news wick at 10 o'clock. But these are really, really deep retracements, which makes it hard to get in. So we want to see more of a clear-cut sign. So if it takes the top now, that's not a double break. That's still one leg. And eventually you'll get to a point where you'll just feel it. It's a gut feeling. I've said this before. It has to look obvious. And there's two different conflicting strategies here. Two conflicting models. 48 seconds left. Let's see if we get this confirmation. So there's our confirmation. Now we want to see it retrace back to the 20 EMA. Since there's no fair value gaps that have been left here, we did have a what you call a early retracement just because the entire range formed within or right on top of the EMAs. So we had our crossover here, and then the market just crashed right into the EMAs, bounced off of them. Blue zone, purple zone. So now that we have this confirmation, there is an 80% chance that the market will not break this low. So now we just wait for a retracement. So far, this is the only fair value gap that was created, that 5M fair value gap. And still just one consecutive leg. So no double break. Get rid of this. Let's see if it leaves us another fair value gap here, which would then become our area of interest on the 1M. So we're looking at, we left a lot of 1M fair value gaps, but nothing here. None of these were tapped, except for this one. So it's very similar to a bit of a runaway market where it's not really giving us any strong footholds. I would have gladly have taken this if we just didn't have a mean reversion model. And again, that was before we had confirmation as well, or a double break. So the more of these points of confluence that you have, the better. When you have a double break, that's the dealer revealing their hand. When you have a confirmation, that's the dealer revealing their hand. When you have a buy model and a mean reversion model, it's not exactly that clear cut. As much as I preach the blue zone, retracement to the blue zone. Remember the blue zone, if it's a buy model, we take a buy from the blue zone once all the confluence is there. If it's a sell model, we take it into the blue zone. But there was no 5M fair value gap created until here. And that's okay. Rarely do we get this coupling, this pairing of a mean reversion and a buy model. But on days you do, it's okay. If the signs aren't there, you don't take it. So I'm still waiting. Let's turn on the standard deviations just to see how far it could go. So there's one standard deviation right there. No retracement after confirmation yet. None of these fair value gaps were tapped. And the only ones that were created. This is a telltale sign of a runaway market and or a market they don't want you to get into. So the only bullish fair value gap that was created after hitting the blue zone was violated. Immediately when you see that, that decreases the probabilities. So this is actually one of those days I'm not upset that we did not yet get a foothold. This was very muddy. And there was no other fair value gap created until right here, which was also violated. This is an inverse fair value gap right here to go bearish. The first bullish fair value gap was created here, and it was violated. Then the market moved up from there. So a little suspect, this market today. No retracement yet, but we do have two fair value gaps that have been created. 58 seconds left for this one, but we do have a fair value gap right in here. The fact that these lows were not swept here means we could come back down and sweep these ones at least. Let's see how deep this thing retraces. About 9 minutes from 11. So once we get confirmation, there's an 80% chance that we'll retrace back into the range itself. So this fair value gap is definitely more interesting to me than this. If it's just using this one to continue up, then that's more of a runaway market. Higher probabilities are from within the range, which gives us a better RR. Just going to take a look at oil real quick on the right. We did get a confirmation a while ago. Let's go to the 5M. So we had a upside expansion model turned bearish, bearish confirmation right into our zones here. We manipulated just a little bit, manipulated up first. We manipulated down and had a double break. It's pretty much already delivered to where I would even be interested. Because you have an upside expansion model, or it could turn back around at the golden zone, which is where the purple zone is. So it's tapped the fair value gap, the NYC fair value gap. It's tapped the purple zone, the NDOG, 61%. We're red on the 1 and the 5. But it hasn't done a retracement yet, so there was the confirmation. It has not retraced back to the 20 EMA. This is the only other fair value gap created. So we'll most likely see a pullback here. NAS is sitting in a higher time frame fair value gap right now. So it could turn back around. I'm not interested at that fair value gap. Longer it takes for the 20 to get down here, or sorry, 20 to get up here. Let's see what happens here. Once you've established your rules, never go back on them. It's almost like you take the same path home from work every day. The one day that you deviate, you get into a car accident. Then you're going to blame that day. Stick to your path. And as far as my rules, I'm not a big fan of these two models on top of each other. Mean reversion and bimodal. Shallow retracement 50%, did not tap the midpoint. Didn't give us a foothold until here, just something didn't feel right about it. Trust your gut feeling. Even if it's wrong, even if it ends up being wrong, doesn't matter. So with oil, we're right in that golden zone. We're hitting that fair value gap again. We haven't hit that 20 EMA since the crossover, and that's the only other fair value gap that's been presented. So unless it retraces back up here and then gives an actual entry, see, no other fair value gaps have been created. That's our only area of interest right now for oil. Now NAS is coming back down for that retracement. Again, proceed with caution. There's just something a little funny about this market today for me. I'll continue to read the ticker tape here, but it's one of these days that I would feel more comfortable probably sitting out. Slowly making its way to that fair value gap. Has not tapped it yet. Now if this candle breaks this high, we do technically have a double break to the upside. We no longer need it to come all the way down here. Oil just continuing to drop. No foothold created, or rather I should say no foothold utilized. That was the only one. So this might just be a runaway market to the downside. So as soon as oil takes London lows, that juice has been squeezed. Still no fair value gap created on oil. It's still in that golden zone. That 20 EMA now punched past that fair value gap. This is the only area. Plus, this is actually a deep retracement. We do have an upside expansion model. So this thing could actually just punch right through as well. Look at all these equal relative highs that it left. So this is another example where the spotlight strategy and the blue zone strategy are conflicting. Upside expansion, bearish confirmation. This is the convergence point of both of those. This is where it would turn around to go up, and then up here, this is where it would bounce to go down. So we just took that high again. That's our double break. So let's see if there's any foothold created on the 1M. There's two of them. We're interested to see if it comes down here. Could just be using this fair value gap. We did violate it. 1 second left, and it didn't close above it. This is still the more interesting area. As mentioned before, nothing I'm interested in taking today. To measure it up, let's see. You have a fair value gap this close. Could dip down there and just take that out as well. .04. From here, it's interesting to there, to that 1 standard deviation. A lot of gesticulation, oil continuing to drop. I can see it wicking down here real quick and then shooting up. Still staying above that 20 EMA. About 20 minutes left. Oil looks like it's doing a bit of a retracement now, back to the purple zone. But since we're only watching the spotlight strategy, the better entry would have been here. This is more or less a runaway. I'm not interested in watching it hit this now and come back down. So now it's just the only one that could give us something, and it's either from here or from here. It could push from here. That's less of an RR. 3 R's more like from here. So until a candle takes this high, it could still come back down and drop and hit this. Over time, you'll find out which models make sense for you. I would have eyeballed this right in the morning and then walked away. As mentioned before, it just gets muddy with a mean reversion model. Mean reversion model, trumpet model, not a big fan of either of those. Make sure you cover all of those in the Learning Hub. Make sure you understand all the spotlight models, and then understand how to decipher if it's a buy model or a sell model with the blue zone strategy. You should be able to see these on top of each other. So now we've punched past that fair value gap again. Let's see what it does there. Get rid of this. So we violated that fair value gap, most likely coming down to here. Now let's see if it violates this one or if it pushes from here. And there is still one bigger 5M fair value gap down here. 15 minutes left. Still just gesticulating around that 20 EMA. All right, finally making its way into this fair value gap. Now let's see how sloppy and or clean it's going to be. Are we going to bounce off this and go up? Or is it going to take out this low and bounce off this 5M fair value gap and then go up? Ideally, we want to see a bullish fair value gap created. And these highs right here cleared. We want to see a candle closure above this line with a bullish fair value gap created. That'll let us know that this thing wants to continue up. Oil just using the purple zone to potentially bounce off of the end dog. Might just continue down from here, but this is the only area we were interested in. If it doesn't come into your zones, leave it alone. Do not chase the market. Got about 12 minutes left. .16 seconds left. We want to see this candle close above here and create a 1M fair value gap. That's at least a good indication that this thing wants to push up. No, so we closed below it again. Now let's see what happens on this next candle. So it closed off that fair value gap immediately. Did not close up here. This is why you proceed with caution. Let's see if it bounces off the 50 here. We also have a long wick. Could bounce off the consequence encroachment of this wick as well. .46 seconds left. So we are getting some reaction there, but let's see it actually close and create that fair value gap. "12 seconds left. I'd like to see this shoot up here now. Let's see if this fair value gap is left open and we close above this line. That'll be the indication that this thing does want to push up. We bounced off of the wick itself, respected this fair value gap, and we're back above the 20. But again, I want to see it close above that line and leave a 1M. Nope. Another reason I don't like markets like this. Look at all this consolidation. Been consolidating for about 40 minutes. Just have to wait and watch. So no fair value gap left open, no closure as of yet. New candle, 51 seconds left. So this is our last 5M candle. We'll conclude after this. This has been a bit of a messy market. We'll go over one thing before we conclude. 23 seconds left. All right, finally we have a closure, at least over that series of candles that brought us to the fair value gap in the first place. Just gonna get rid of this. Still no 1M fair value gap created here. Just a whole bunch of nothing right now. 3 minutes left. Taking another swipe down. So if it takes one more swipe down here, then it's better to just pass on this day. This will be our last candle. So we'll conclude the session there. Didn't really give us a 1M fair value gap here after tapping this. Could go down and swipe this again, maybe even tap this. So it's best to just pass on it. But the one thing I want to go over before we conclude, just going to jump back up to the 5M. So if this was any other model, if we had a upside expansion model, seeing that bounce off that blue zone would have been more than enough of an entry, because we did take the manipulation to the downside. That blue zone held. The only thing here, though, is because we did have that mean reversion model, I wanted to see it dig deeper. If it had hit here and created a 5M, I would have gladly taken that on a mean reversion. And then if it was an upside expansion, I would have gladly taken this if we had a 5M fair value gap created there as well. Sorry, 1 second. But since we did have this mixed bag, I just never felt comfortable. Because everything that I've seen in the past usually indicates that we bounce off this and we stick around the middle. Hit this, go down here, come back up here, back to the middle. That's what I mean by trust your gut instinct and trust your models. So nothing about this really gave me that bullish feeling. Even though we had this push up, that's fine, but look at this, all this back and forth. If somebody just trusted this, got in, rode this, sure, but we trust all the confluence. That's why we're high probability traders, we're not gamblers, and probabilities were low there. So we'll conclude the session there today. Looks like we're taking one last swipe at that 5. I maybe might want to come back up from here, but again, not interested. So please check us out on fractaleffects.com. Make sure you hit the subscribe button, turn on your notifications so you know when we're live. We'll be live again tomorrow. See you guys.